What's up, guys? Eric here. Hope you had a great Christmas if you're celebrating. Happy holidays. I've got 3 stocks here that I'm looking to buy. One I actually own, but I don't own enough. And then there are 2 stocks that I've never talked about on YouTube I'm going to cover today. So 3 stocks that I'm looking to add for 2024. Of course, if you've been following the channel, you know that we're crushing it. And of course, people that are focused on growth, we're doing pretty well right now. But the thing is we were buying levels when no one else wanted to buy. And so that makes it really hard because I'm looking at the portfolio today and pretty much everything is up a lot since I bought it. And a lot of it was just recently, or just a couple months ago, back October of 2023. Now, if you're a new investor, this can be challenging because you're looking to get into the market, and a lot of the stocks that you want to own, they just popped 100% or more. So I do want to say that if I were a new investor, I would have to build a portfolio that fit my needs, my blueprint, my tolerance, my DNA, all those things. So the stocks I'm buying today, if I didn't know anything at all, I wouldn't be going out and rushing just to buy these 3 stocks. You would want to build a core first. And that's what we teach here in Fired Up Wealth, not only in the YouTube channel, but also Patreon and Discord. And we have a masterclass video series. But today I'm going to share 3 stock ideas. I really want these to be ideas. Make sure they fit with your blueprint, your risk tolerance, and make sure you go do your own homework, due diligence, and make your own decision before you buy. Let's dig in. Now, this is going to be a $1.12 billion. Fidelity calls it a micro cap, but really it's a small cap. So this is a small cap stock. 52-week range. This was down to $6.91. The high 2107. And of course, I had this video lined up yesterday. The market was closed. It was Christmas. And now today the stock's up 7.5%. But I'm looking to hopefully add some of this, especially on any kind of pullback. And acmr is one that we covered recently on a top stocks to buy or best stocks to buy video. We said under $15 DCA. It got down here to $12.81 just the end of October. So I was buying it really under $15. I've got about 0.5% in my portfolio. Portfolio is about 1.7 million right now. It's about 0.5%. And I think I'm up something like 40% on ACMR. So it's tough to just go out and buy more shares, but this is one on my radar. And the reason for it, if I look at it, even though the stock is up, 107% year to date, the PE ratio on this is 18.11. And being a small cap, it's not really one that's on everybody's radar. And I think there's room for it to grow over the next couple of years. Now, according to Seeking Alpha here, the non-GAAP TTM, this is a PE ratio 13.32. So even though the stock's up 107%, it's still not outrageously expensive, right? The PE gap TTM 17, forward 17.15. On the growth, we got solid growth here, 32% year-over-year revenue growth. We got forward revenue growth of 37%, EBITDA growth of 45%, and so on. Now, if you look at the rankings, valuation, they have it as a B+, growth an A, profitability D+, momentum A. So what's going on with profitability? It really comes down to this levered free cash flow margin, negative 31%. So that's something to keep in mind. This also does have China risks. But with that said, this isn't advanced equipment, lithography equipment, some sort of advanced nanometer, small nanometer equipment. That's very different than if you think of ACMR. A lot of this is going to be cleaning. They also have furnace and other products as well. But primarily when you think of ACM research, you think of cleaning. So cleaning wafers. So it's not the most exciting thing in the world, but more than 448 patents. And that's going to be in the US, China, Japan, Singapore, South Korea, and Taiwan. Headquartered in Fremont, California, has 1,200 employees. And this is the product mix. So the largest is going to be cleaning. And then you have the ECP, furnace, and other. That's going to be that little bit darker blue color. And then this aqua color, advanced packaging and other. So I look at total revenue growth. This is from FY17 to FY22. You got 60%. Nice trend upwards. And I think that momentum will continue. So semiconductors, the new oil. And even though this does have China risks, and really China is a lot of the growth machine, I don't look at this as something where we're going to put regulations on it. It's not going to be the same as like NVIDIA H100 chip or something like that, advanced AI technology. So you can use, cleaning equipment for lots of different products, but it's not going to be something where I see it being regulated as strictly as some of those other products that we talk about. So ACMR does have about 6.6% short interest, and I'm not saying that you should run out and go buy it hand over fist, up 7% today. But I do like this stock. It's one to keep on your radar. I'd like to add some more shares, especially on a pullback. The next one is Klaviyo. And a lot of people mispronounce this, but it is Klaviyo. I actually went and verified it on their Instagram account. The ticker is KVYO. This is something I've never talked about on the YouTube channel. Now, this just went public September 20th, 2023. That ticker again, KVYO. So, of course, in 2020, 2021, a lot of people got burned on new IPOs, including myself on a couple names. And so I think that excitement just isn't there that you might have seen a couple years ago, and that does impact these. I'm not saying that it's necessarily dirt cheap here. I'm saying it'd be much more expensive in that era. The 52-week range on this is 24.35. The 52-week high, 39.47. So you see it has pulled back nicely from that $40 mark to about 28.60. I'd be looking at this one, maybe 25 or less to add a position. Now, this is going to be a $7.52 billion market cap. You can see it went public here just in September, $32.76. So it's lower now than it went public. The lowest point here, $24.93. This is November 9th. And you can see it's, negative 12% year to date, but year to date is just from end of September. This is an article on Seeking Alpha from Fountainhead. And I think this is a quick snapshot in the summary here just to go through. So integrated data platform, several competitive advantages over its competitors. And this is dealing with marketing automation. So marketing automation. So we look at, best stocks to buy. We're trying to find those secular growth trends. We talk about disruptive technology, mega trends. This is definitely in that category with automation, deals with AI, but it's more of an outlier. It's not something I'd consider maybe a core, which is why I don't really own it already. But I'm looking for opportunities out there to build around my portfolio. I've got my blueprint baked. I've got my portfolio built out for my needs. And I'm trying to find some stocks that I think can be winners, give some nice returns to build around what I already have. Its close association with Shopify gives it a competitive edge, something to note there. And according to this author, he thinks that it's a steal at $28 a share. Well, let me look a little closer and give you my take on that valuation. This is going to be in the cloud SaaS universe, so we're generally not going to look at the PE ratio that closely. But just for reference, it does have a forward non-GAAP PE of 82.19. Growth on this year over year showing 62.66% here on Seeking Alpha. And this is one that's not profitable. It does have nice, gross profit margin at 73.65%, but you can see like the EBITDA margin, negative 43%, and so on. So this is more of a speculative play. It doesn't have that PE like the last stock we talked about with ACMR, but it is in growth mode and it's growing at a nice clip. So this could be opportunity longer term, especially if you're holding the stock for 2-3 years. Now I'm still in the process of researching this one, so I haven't made my mind completely, but I wanted to bring it to you on the video so that you could do some research yourself and then join me in Discord and we can share notes. We can compare notes and see if it is an opportunity to buy. Okay, so Klaviyo, looking at it a little bit closer here, powers smarter digital relationships. So activate, connect, guide, and grow. To give you a better idea of what that means, initial connection, revenue driving engagement, this is all done through smartphones and SMS and so on. But $642 million in revenue, 119% net base dollar retention, 135,000 plus total customers. I was a little bit surprised, and they're showing here 54% revenue growth in their last slide deck. 15% free cash flow margin, so that's good. Even though they don't have the profitability metrics quite there, it's not like they're just burning cash hand over fist. Now, looking more at those SaaS metrics, we like to look at EV NTM revenue. This was a 9.4x. So to give you an example, Snowflake might be something like a 20 or 22. This is 9.4. So it's not going to be as expensive as the more popular names like the CrowdStrikes and the Datadogs and the Zscalers and so on. 9.4x. Rule of 40, 62%. Now that's actually one of the top 5 when you look at this universe in that cloud SaaS world. And so I think it's something to at least put on your radar. And again, I want to do some more homework on this one, but it could be a potential one to add to the portfolio more as a speculative type investment. And one last thing to note here, there's a ton of slides. I could spend a lot of time on it, but AI is central to our roadmap. We have a significant advantage. Again, they have that partnership, that relationship with Shopify. And of course, AI is a big buzzword. And really, if you think about AI machine learning, it's been used for years and years, But now it's like you have to put it in all of your decks and all of your marketing because that's really what's going to sell to investors. So you have to be careful with that. But I think it's important to note that it is central to the roadmap. And I do think they have legitimate AI tools. Okay, last one. Product-led growth drives highly efficient go-to-market engine. I always like these flywheels and these kind of flow charts, these infographics. It gives you a visual for your mind. Some people learn really well with these type of visuals. So that 135,000 customers in the middle. So dollar-based net revenue retention. That means you're keeping the customer happy and expanding the use. They're either buying more products or using the tool more. And it deals with churn. That's an important metric. 119% is a solid number. So if you look at this real quick, organic inbound, word of mouth, goes into self-serve, low-touch sales. It goes into email, frictionless customer experience, rapid time to value, upsells. We're talking about SMS here. So some of these components would compete with like a Salesforce CRM, but it's very different. But there are some components here that would overlap. So the commerce platforms, Shopify there, you can see BigCommerce, Amazon Prime's in there. Other technology partners include Google, Zendesk, Meta, and a few others there. 5,000 plus unique marketing agency and consulting partners. And just to give you some quick numbers on this, comparing this to Salesforce Marketing Cloud. So this is just Salesforce Marketing Cloud. There's different products, of course. 7.11% market share, and that's in comparison to Salesforce Marketing Cloud at 0.91. So this is actually quite a bit larger in this space. Now, I generally don't invest in energy companies, utility companies. This is one that looks pretty attractive. This is one where people have come into Chart Day for the last several years, and I always look at it and it seems like the valuation is crazy high. Like I remember seeing 30 and 40 PE ratio. Now this has come down to about a 15.8 on the P ratio. This is NextEra Energy, ticker NEE. Now the 52-week range, the low was just here on October 6th at $47.15, and the high January 17th, so the beginning of this year, at $86.47. So that high of 86 is now trading around $60 a share. And this does pay a pretty nice dividend, 3.129% dividend. And it's a larger cap stock here, about $123 billion market cap. So this is going to be an energy utility company. A lot of it is going to be wind power, so focus more on clean energy. You can see in the legend here, it's pretty much across the United States. Wind is going to be the star. You've got battery storage. This is a good snapshot here. So wind is 69%, solar 14%, other 9%, nuclear 8%. So of course that dividend's attractive at 3.1%. And this is really going to be a DGIF type play. You might be surprised at some of the numbers here. Looking at growth, revenue growth year over year, an A+ on Seeking Alpha. This is NextEra Energy, 38%. Now forward only 16.9%. Valuation on here, it's showing a PE gap forward of about 17. And the profitability numbers are very strong. You can see gross profit margin 61.9%, EBITDA margin 55%. This one also has negative leverage free cash flow margin about 71% there, so something to keep in mind. Now, this is showing a valuation of D. I'm not sure if I agree with that necessarily. I think, of course, it's going to look at its other peers and utilities, so you could argue there's room for it to come down. But if you look at how this stock has traded, it's trading at a lower premium than what it has historically over the last few years. Growth on this, a B, B growth, paying a 3% dividend, not all that common. Profitability is a B minus, and that momentum's enough. And sometimes that's a good thing. Sometimes you want to buy against the grain. So I've got lots of videos coming here. I'm getting ramped up for 2024. We're going to turn the volume up here very soon. So make sure you subscribe. I've got portfolio videos coming and more. If you're new here, make sure you subscribe to the channel. Click that bell for notifications so you don't miss the next video. If this video is helpful, drop me a like, drop me a comment. Have a great rest of your day, guys. Happy New Year. Take care.